You probably have or currently own shares of stock from companies like Apple, maybe Tesla, or any other company alike in the S&P 500. However, let me ask you this question. Do you think that their accounting department spends most of their time spinning their wheels around taxes or on actually how to run a better, more profitable, and smarter business? I believe that we can agree that it's the latter. However, for different reasons, the accounting industry for the small business owner, for the privately held business, revolves around taxes. And that handicaps business owners that are specifically making anywhere from $500,000 upwards to 2 million, even 3 million, towards breaking through their goals and just basically and simply put, doing better than last year. Because if your business is not growing, it's dying because of inflation. My name is Jose Cardenas. I am both a CPA and enrolled agent with Westfront Tax and Accounting, where I lead an outsourced accounting team specifically for business owners looking to get more and the most out of their accounting so that they break through their goals and they basically start making smart decisions in order to run a more efficient business and more profitable business while also being tax efficient at every step of the way. For one reason or another, the typical accounting process for a small business looks like just keeping everything clean in the QuickBooks Online. Everything categorized, everything reconciled, come year end, have your CPA file the taxes. And look, that falls short for you. And this is why. Because you probably check your books, your financial statements, your profit and loss statement, if not once, maybe twice a year, maybe 3 times a year. And for what? For figuring out how much you're going to end up paying in taxes. And look, I don't blame you because that accounting process helps the IRS. The question is, what helps you? What helps your business? What helps you breaking through your goals? What helps you going better, doing better than what you did last year? Because look, we have to somehow do something different if we want different results. And this accounting process is the very same process, the very same concept structure that leads you to having a CPA that only talks to you once a year, a CPA that is not engaged in your operations, a CPA that basically does the same thing for you year in, year out. And guess what? If you're looking to take things to a different place, towards a different direction, it starts with your systems. It starts with your processes. Because otherwise, how else would you do it? The universe gives you what you give it. It all depends on your inputs. And if you want a different outcome, you can't be giving in the same inputs. You have to do something different. Then it begs the question, okay, Jose, what does getting the most out of your accountant, what does getting the most out of your CPA look like? And I would say that the very first step is making sure that your bookkeeping is taken care of by the right person, by the right people. You see, if you've been working with the CPA for years at this point, I would dare to say that they have probably outsourced your bookkeeping overseas to somebody from India, somebody in Pakistan, in Vietnam, who knows? The point is that somebody that you don't know and you want to be able to at least get to know the person who's actually going into your account and be able to put a face to the name. Because if I were you, I would be very uncomfortable about that. Because the whole point of bookkeeping is for what? For your taxes. For actually substantiating what gets imputed into your tax return. So who better than, if not a CPA, somebody that the CPA has oversight over to do your bookkeeping? And I would argue, okay, if the CPA has oversight of the people in foreign countries, how can the CPA itself hold these people accountable if something were to go south? This is why I'm not a huge fan of also having a CPA for taxes and then separately a bookkeeper that's probably affordable to do your bookkeeping, because your bookkeeping dictates your tax return. It dictates what you end up deducting. And guess what? Your bookkeeper doesn't know taxes, and well, the CPA is not responsible for checking anything. That's your responsibility. So the tax return gets audited, guess who's responsible? You, not the CPA, not the bookkeeper. Number 2 is communication, and I believe that you can agree with me here very, very strongly. You see, you revisiting your accounting and talking to your CPA once a year does a disservice to your business. Specifically, if you're trying to take things to the next level, specifically if you're trying to run your business like a real business, like a smart business, because things change quickly and everything could be different from one month to another, from one quarter to another. So you want somebody that's engaged week in, week out. Number three is actually having a process. You looking at your financial statements once a year. When the year ends, that's not having a process. What having an accounting process looks like is you getting your financial statements every month. So that month in and out, you know exactly where you are. Because if you don't know your numbers, you're not in business. Number four is actually having accounting. And yes, you can have your bookkeeping set up and still not have any accounting. And the simplest form of having accounting is this. Let's say ideally you get your financial statements every month. Within those financial statements, specifically on your income statement, you should see month in and out your tax exposure, where your tax expense is, what it looks like for that given month off of your business profits, all things considered. That's the simplest form of what having accounting looks like. Number five is financial statement structure. Do your financial statements tell you where your team is outstanding? Where are they most efficient? Where are they least efficient? Do you know your average bill rate? Do you know your utilization rate? Do you know your standard rate? These are very important questions to know the answer to. Do you know your job profitability? Do you know your project profitability? Very, very important to know so that you can price better. Now, do your financial statements also tell you how good of a job you're doing at just managing the whole enterprise, at just managing the whole operation? How much are you costing the business by you managing it? Very, very important distinction to look at, for you to understand, hey, these are costs that are directly related to me producing revenue versus normal operating costs that are going to be incurred regardless of what we do. Very, very important distinction, and very important to understand the two and the differences between the two. The structure does help with your cash flow because now you're in a position to start implementing some real tax planning. You see, when you strategize for taxes, you have to balance out your business tax deductions with running the business and with securing financing, for example. So with running the business, you have to make sure that, hey, are you okay with letting go of that cash on hand? Because the best way for you to look at business tax deductions are as merely discounts on your purchases. There's no way that the government ends up giving you money. That's not what a write-off is. And two, as it pertains to financing, look, if you report low income, lending institutions, they'll treat you like a low income business. You don't want that. So if you're looking to maybe secure a business loan, an investment property, or maybe a new home that you're looking to expand to with your family, you have to take into consideration that being too aggressive with your business tax deductions can later on kill your financing power. Some last thoughts that I have as I finish recording this video is that, look, when you're prospecting, when you're interviewing new CPAs, new accountants, new accounting firms for you to work with moving forward, you have to make sure you ask the right questions. And as a matter of fact, I'm going to give you the top 3 questions that I can think of so that you can gauge, okay, are they going to be involved? Is this a good engagement? Is this what I need for the business to take things to the next level? Number 1, you want to make sure that you ask if the firm is onboarding new clients. And obviously they're going to say yes, but what you're after is, hey, you need to assess if they just year-round get on board new clients. If that's the case, huge red flag. You want a firm that is sustainably onboarding new people, not all the time as they come. Number 2, you want to make sure to ask, how does engagement look like week in, week out, month in, month out, every quarter, every year? What does communication look like? And then third, and I think it's a totally valid question to ask, is what's the longest amount of time they have worked with a specific client? And well, that does conclude this video. Hopefully you liked the video. Hopefully you found it insightful. If you did, make sure you smash the like button, subscribe to the channel, follow the channel. Let me know if you have any questions in the comment section. If there's any specific topic that you want me to cover, let me know in the comment section below. And with that said, I'll see you on the next one.